What about tax cuts? Are tax cuts good for your business? Is Donald Trump as president, is that a good thing? Is Synchrony better off for Donald Trump being in the presidency?
I'll talk about taxes, and I would say that taxes we think are good for us because of the fact that it's putting more disposable income into consumers' hands. And I think there's two things they can do with that extra dollars. They could pay down debt, or they can shop more. So for us, we think it's a positive from a consumer perspective.
As a CEO, there are some things that you can control or at least influence. There's some things that are largely outside your control. Let's talk about the ones you really don't have much control over. How do you plan? How do you manage? How do you have a strategy for those things? Take one, interest rates. Interest rates have to affect your business. Mm-hmm. You're not sitting on the Fed. You don't get to decide that. How do you plan for the various possibilities about interest rates?
Yeah, I think, any good company is going to sit back and really say, as they're doing their planning and their strategy, what are the things that could impact the company? Interest rates for us being one, or retail transformation that's going on. And I think what we do, or what I do with my leadership team, is to say, okay, how are we going to protect ourselves from those changes, and what do we need to do, and what role do we play in helping to at least minimize any disruption that could happen in a company, but stay focused on, again, the vision and strategy of which we're really trying to achieve.
So do higher interest rates help you like a bank or not?
We try to not take interest rate risk. Mm-hmm. So, we try to balance that out. So, we're not too worried about interest rates rising because we try to manage our book that way to minimize interest rate risk.
Flip side of interest rate risk is credit risk. Where are we in the credit cycle? Is credit risk increasing?
I think I'd start with the consumer's still very strong. I mean, the economy's strong, employment is good. Those are all factors that I think really play into credit challenges or credit risk. I think that what we're seeing really is more a normalization. If you go back 14, 15, and probably part of 16, it was unprecedented positive credit environment. And so I think what you're seeing now is just a bit of normalization where, the consumer's getting a little more confident and, revolving a little more. But, we don't sit here and say there's some big crisis coming. We don't see it, at least for we look at least 12 months ahead. We're not seeing anything that's concerning us. I think it's a bit of normalization.
But the consumer seems to be drawing down on their savings some. Are you seeing delinquencies go up? Are you seeing defaults go up at all?
Well, we saw a little bit of that in 2017, and I think that's, again, we see it as more of the normalization and not some big step change in the economy that's causing it.